Good ECB day, everybody. Hello, Warriors. Also like to welcome our trading warrior brothers and sisters from investing.com that'll be with us today. Have an excellent interview lined up today with Alba Puero, live from Spain. Top Gun trader. Stick around for Alba. Just want to start off with our traffic light page, and it says what it means. Don't run red lights. So people that haven't seen our traffic light page, we cover many pairs. You get all different types of analysis. You get macro, you get candlestick, you get basic, you get harmonic work, you get Elliott wave work, you get all time frames, you get major support and resistance areas, you get your lines in the sand. So check out our free trial. Well, not our free trial, but I say invest $1 in your future trading performance. Not, you know, it's a pip on a micro. So you get 10 days to navigate around and make a judgment as to whether or not this is going to add value to what you're trying to accomplish as a trader. So let's get to the markets. Euro selling off initially on the ECB. Dixie threatening the 94 breakout. So I'm assuming no rate change, but the big move will probably come or continue on the press conference. Can't argue with this action in the Dixie. It's probably right at a neckline here. There's your 1 hour look. There's your 4. So unless they could reverse this, and to me it doesn't look that likely that they're going to be able to, it looks like we're going to have some type of significant breakout. You know, as Blake's been saying for a while, we've been in a box. Looks like we want to pop out just like a jack in the box, pop out the upside of the box. A lot of people have been talking about a year-end rally in the dollar back towards 97. That's looking more viable as long as we hold today's lows and this candle remains intact. Everyone in here knows I'm a big fan of the weekly charts, and I check out weekly off numbers, which is a very simple technique, and all you do is you count back 2 weeks. So we're getting a continuation move because the 2-week off number here is 93.06. So as long as we close above 93.06, looks like the green light's on. We're not even close to overbought on the weekly. You know, we're still at 44. Up at the highs, we were 80. So room to move. A lot of people will call this a head and shoulders breakout, closing above these levels. So far, I would say that Mario has a smile on his face. Getting the euro, that is his intention. He doesn't want to see a strong euro affect export prices, ECB dovish and Catalonia, everything. So we'll see what kind of response we get in the S&Ps. I would assume they're going to like it. But we'll see what happens there. Volatility starting to pick up. We got as high as 13 on the VIX yesterday, and I believe we have a pretty full crew here today. And a guy that I was looking forward to working with before I joined ForexAnalytix. What I really respect about Blake is his handle on the fundamentals, as well as being a great technical trader. So Blake, if you're here, I'm interested in what you're viewing here, if you think that this is real and that this move in the dollar may be able to stick. What do you think, bro?
Well, you know, hey Dale. First of all, hey, the euro is obviously it's weaker following the ECB. So if you guys don't understand why the euro is weakening, actually the taper amount that the ECB is doing is actually higher than expected. I mean, meaning higher. It's lower than expected, which is more than the market expected.
Okay.
Yeah. And it's more, and it's longer. It's longer. It's going to be a longer duration. So they're going to be tapering longer, but they're also tapering less money. The market was looking for 40 billion euros per month, and they're going to only be, buying assets of 30 billion per month, but they're doing it for a longer period of time. That hasn't seemed to offset the lower amount at this point, so we are seeing a weaker euro. But and this is kind of the chart that I had set up, and just so you guys know, I had no euro exposure going into this, into the ECB. I'm a little irritated because I've been, one of the things that I wrote down on Sunday night. Okay, on Sunday night I write down what I want to do for next week. Okay, I wish my camera.
Great habit for everyone to have, Blake.
Yeah, it's a Saturday, Sunday, deal for me when I do my analysis, and one of them was short the euro yen at 134.30, and because this is, so you guys see it, the euro yen 134.30 is the big monthly 618 retracement. I'm like, okay, if we get back up there, I want to short it. Well, I did. I shorted a little early, and I ended up getting out of it for a small loss last night, because I'm like, I just don't know if I want to hold the position through the ECB, and I didn't. So I took a small loss there. Now my other trade was, short the dollar yen on a move to 114, just because that also was a, if you look at the dollar yen, this is obviously the risk is being short up here, and then knowing where your risk is right above the highs, and I shorted that, and actually ended up making a little bit of money in the dollar yen. But I'm upset because I took a loss in the euro yen, and obviously right now I'd actually be up slightly in the euro yen, because I was early to the game, because this is the Sunday gap. I shorted the euro around where we're currently at, and I closed it for a loss last night, while it was up here, because I had assumed we'd be down where we're at right now or lower ahead of the ECB, but we weren't. We ended up falling after the ECB. Now we still have the press conference happening here in about 23 minutes, which could influence the euro.
Could give you a pop to get back into the trade, Blake.
It might. I don't know if I really want to play the euro yen right now. I mean, if it rallies from here, that means that Mario Draghi said something that is going to cause a rally. So I don't know, and I don't know what he's going to say. And but believe me, I'm probably the worst central banker follower out there. Admittedly, I mean, if
you mean Trump's not going to nominate you to be Fed chair?
No, I'd probably be the last person on his list of people, next to my 13-year-old son, to be nominated again for Fed chair. I'm really the worst Fed watcher. I react more than I do better reacting to central bankers versus anticipating what they're going to do. But I will tell you, if the euro rallies from here, like, okay, so you can see the euro response, and we've come, obviously we're closing in on probably some pretty key support down here. So you can see I can just do it like this. This is probably really good support. I mean, the euro could very easily bounce from current levels and bounce right back to 118.20. Now, if the euro bounces based on something that Mario Draghi said, the question that you asked me is, would I be a buyer of the euro or shorting the euro yen up here? I mean, I may. Again, I don't know why or how, what would cause that bounce. But if we did bounce aggressively in the euro, I don't know if I'd really want to sell it, because he obviously said something that is causing it. And again, what he would say, he might be talking, the duration of the taper, and maybe say, but this isn't etched in stone, and we're really looking to, possibly taper faster, and end our QE sooner rather than later, and maybe the euro rallies 100 pips from here. I don't know. It's hard for me to make that judgment call on would I short the euro yen on a rally now without knowing why it rallied, does it make sense? I need to know why. Like if there's a reason where he says something that really pushes the, euro up 100 pips, it's probably going to go up 200 pips. You know what I mean?
I wanted to ask you one question, and one day does not a trend make, but with the bonds getting killed yesterday, the U.S. dollar yen still sold off, which is the first time I've seen that in a while.
Yeah.
Because the market finally came off, right?
Yeah, that's a good point. I mean, first of all, if you look at like this is the 10-year, and this is the sell-off that we saw. One thing I want to point out is the see that long wick on the daily candle?
Yeah.
That long wick begs for a bounce. Okay, that begs for a bounce higher, and if we get a bounce in bonds today, obviously that's going to be bearish for the dollar yen, and that's I'd be more apt to short the dollar yen here than short the euro yen at this point, because I really know my risk in the dollar yen. I mean, my dollar yen is very, very well defined. Let me just make it clear. If the dollar yen, you can see this trend line here.
Yeah.
If the dollar yen gets above 115, it is bullish. We're at 114. We're basically 113.75, 76 right now. If we get above 115, it is bullish. So I know from just a basic risk reward, my risk is above 115, so my risk is here. My reward is somewhere down here, whether it's 108, 109, 110. Okay. Yeah. So I'm risking 130 pips from where we're currently at. I'm trying to draw with my that's not coming out so well. Risking 130 pips to make what? Maybe 400
or
Yeah. I mean, this is a good risk reward to be short the dollar yen here. I am not short the dollar yen. I was short last night. I closed it at 113.55, and I was short at like 114 something. Like my average was like right around 114. So I mean, I made a little bit of money, but I don't mind getting back in short. I'd like to see how stocks react today. As you had mentioned, the S&P might go up today based on what the ECB is doing, but that's something that I'd like to do is reshort the dollar yen. Would I reshort the euro yen? Again, I have to know why it's going up. If it's going up because something that Mario Draghi says here in the press conference that really pushes it higher, I don't know if I want to stand in front of that freight train. There's another thing that you have to keep in mind with the euro yen. This rally, we've been in nonstop rally mode since a week before the French elections. Yeah. Okay. I mean, yes, we are very divergent up here. I mean, the whole reason why I was shorting the euro yen, I was really targeting it is look at this daily RSI. Look at that. Glaring. I mean, it is really, really glaring. Now, and I've been targeting the euro yen short for the last 2 weeks. And just so you guys know, I mean, I was short pretty aggressively at 132. And it rallied to 130, like 133.15, and stopped me out. I got hurt trading the euro yen on the short side last week, and then I lost money again today, just a little bit, but I'm like, overnight, as I explained to you guys before, the euro yen makes me really nervous, because the flip side is if we break out, if we break above 135, this thing is gone, like. Boom, gone. And again, I have to take you guys over to the dollar index, because the dollar index, yes, we have this big inverted head and shoulder pattern. Yes, we're at the neckline right now. Yes, I see it all. But what if the euro dollar just rallies like berserko today, following the ECB press conference, and we ignore this inverted head and shoulder pattern, and the euro dollar starts to rally, and the dollar index breaks down, that alone could lead to a euro yen rally. Mm-hmm. Because that doesn't mean that the dollar yen has to go down. What we've seen as of late, and anybody who's been shorting the euro yen can attest to this, what we've seen as of late, we see the dollar yen not going anywhere and the euro dollar going higher. that means euro yen exchange rate goes higher, and that could very easily happen again. So, you know, and just speaking of the dollar index, I mean, you see the dollar. Yes, we're right up against this this neckline here, but in all actuality, this dollar, I mean, you know, the dollar that you see as it stands, it hasn't broken out yet, and the breakout probably will have be more the focus of you know, the tax reform versus the ECB. I doubt the ECB is going to push us out of this. Maybe it will.
Plus, Blake, we don't know what kind of candle we're going to have till it closes. I used to anticipate candles, but you know, we have all day, right?
So a lot of time left today. A lot of time.
You know, you made a great call identifying a bear flag in the S&P earlier in the week, man. Once it took that flag out yesterday, was a pretty good down day. May have even reached a flag target yesterday.
Yeah, we this was started last week. It was this one. Yeah, it was like a little flag here, and yeah, that did complete, but we came right back up. I mean, look, the S&P is still really strong. I mean, there's no doubt about it, and I'll tell you, I think you got to be very careful while you're above there. You know, look at how strong the S&P is here. I mean, you know, it's pretty damn bullish. But the flip side is for the S&P, we're also at channel highs. You know, I think, you know, we'll come down and probably test this. I don't know. The stock market is so strong, Dale. It is just the amount of buyers at every freaking turn is just it's insane. It is really quite staggering how the market, I mean, just finds buyers no matter where we're at. Okay, no matter where we're at.
Tina, and I'm not talking Tina Turner. You know, there is no alternative, is what people are saying.
Oh yeah, yes. Yeah. I mean, you know, okay. I know I've said this a lot, and I'll say it again. Look, anybody who's anybody, and I'm going to tell you the guys that I trade with every day. Just so everybody here knows, I trade for a closed-end fund, and the guys that I trade with are some of the sharpest minds from New York. They all transplanted to Florida. They traded in New York, in the city, for 20 plus years, every single one of them. And there's a small group of us, you know, and I chat with them every single day. I'm on Skype with them all day. They're mostly talking equities. I handle most of the currency stuff for the fund. So they if they're going to trade currencies, they usually bounce ideas off of me, right? These guys all have connections to some of the biggest managers on the street, and a lot of them are, you know, they're just good friends of theirs that, you know, they talk every day. You know, I hear them on the phone. They're like, hey, you know, blah blah blah, and everybody says the same thing. Look, it's a train wreck. It's a slow motion train wreck, but we have no other choice. We know that the market's going to come down. We know at some point the market is going to come down aggressively, but we don't know when that is, and until that point happens, we just continue to buy. And there's, because we have to stay invested in the markets, because we have to keep up with what the market is doing, or at least stay close pace, because if the market's yielding, you know, 20% annually, we have to be invested in the market. And we know that at some point everybody's going to pull the plug, but until that happens, we have to just keep buying. And I mean, that there's going to be some sort of event that is going to shake the trees of the market, and we all know it. We all can see it. You know, aside from like the young guys that have been in the markets for, you know, maybe 10 years, they've never seen anything but an up market. For those of us that have been in the markets for 20 plus, some people 30 years plus, I mean, we know it's a cycle that's going to, yeah, or 40. We know that there's the cycle is going to end. And I've been through a lot of nasty markets in my 20 2-year career.
Oh, you're a young pup, buddy.
I'm a young pup, but I've seen some ugliness. I've seen some ugliness out there, and I'll tell you, it's coming, and we just don't know when it's coming. But when it comes, you know, you got to be prepared. But right now, is it here yet? No. And is it going to be some sort of event? Probably. You know, is it going to be the buy the rumors, sell the news after tax reform is done and dusted? Maybe. Is it going to be some blow off top? Probably. You know, is the market bearish yet? No. You know, and you just kind of got to wait for it. And until then, it's frustrating. It is. I mean, I look at the market every day and I just want to beat my head against the desk and say, oh my God, here comes the buyers again. They're buying the dip again. But I mean, it is what it is. Like you said, there's no other alternative right now. And everybody's chasing yield. Everybody. Okay.
Yeah,
so,
you know, Blake, a lot of hedge funds have closed because they were only up 7-8%.
Yeah, they can't keep up. They get redemption. So, you know, if people are like, well, why am I going to put my money in this?
Why would I pay anybody that can't outperform me buying a spider?
Right. I'll just buy an ETF. I'll just buy an index fund. I mean, I'm going to do that versus, and everybody's got the money funneling the same direction. We all know that. Exactly. And again, it's all money going the same way. Everybody's got on the same program. Everybody's got, the problem is you got the boat that's very lopsided right now. And everybody may be standing on the starboard side of the market, and the boat's going to eventually tip over, but it hasn't yet, and it's still going. Okay, so that's enough about that. I don't need to continue to talk about the stock market, but I think everybody understands that, hey, it is what it is, and the market continues to grind higher, and there's a lot of buyers underneath the market. And until there is news,
Yellen's out of the running.
What?
Yellen is out of the running.
Oh, that's why the dollar's screaming right now. I wasn't even paying attention.
She's out of the running.
Holy cow, I'm sitting here running my yap.
That could be the event. I mean, I go back to the Paul Volcker days, buddy, and he was called the liquidator.
Wow.
Maybe that other guy that you were talking about this week, that's a hawk.
Oh, John Taylor? Yeah, I mean, John, well, look, I mean, wow. Yeah, it looks like we are getting a hell of a, so it's interesting, the stock market hasn't really responded to that news, and you're right. And you know what, I can't believe 5 minutes ago I didn't even hear that. Notice the lack of response in the euro. Let's see what the pound's done. The pound's selling off. The Aussie selling off a little bit. Kiwi, Swissy. Oh, hey, you got to pay attention to Swissy here.
Well, you got a line there, buddy. Yeah.
Well, yeah. We're at the 78% retracement. We're right up against key resistance here. I wouldn't be chasing this thing up here, but that's me. John Taylor and Powell, huh? Taylor, famously known for the Taylor rule. You know, if he is,
what is a Taylor rule, Blake? Do you know?
It's a mathematical equation. And here, let me so I don't butcher it. Let me pull it up here really quick. It's his. He's a professor that he designed. Crap.
It's a mathematical equation that, according to some inputs. For example, inflation, and you also need to eyeball some parts of it. I mean, depending.
Hey, Steve.
Hey, for everyone who doesn't know, Blake, that's not Blake with a Greek accent. That's our own Steve Bolge.
Yeah, and you know what? I'm having a really tough time with my Google right now. I don't know what happened. I'm
Did you insult it?
Huh?
Did you insult your Google?
I did. I insulted my Google. I was going to pull up the Taylor rule and read it for you, but by his equations, and he, by the way, he's also made some comments that maybe he won't be so, he's got kind of moved away from being so rule based recently. The Taylor rule would suggest that rates should be higher than they are right now. Some
a lot higher, actually.
Yeah, some people estimate like it to be like a couple percent higher. And look, that could be the thing. You want to talk about something that could break the market. If John Taylor is selected as Fed chair, you know, and the market starts going, oh my God, the, you know, rates could be a lot higher than we think. You know, perhaps, you know, the stock market takes a look at that and says, we can't handle, you know, 1% or 1.5% or 2% higher in rates.
He could be Trump's Volcker. You know, Reagan had Volcker, and this guy sounds a lot like Paul Volcker. And we all know, I don't know if you were in the business in the early 80s. But,
no, I wasn't.
All right. Well, you know, Volcker just kept raising rates and raising rates. That's when we had whip inflation. Now it's, you know, whip deflation. But he took all the markets down. I mean, short-term rates went to 20% on the T-bills. I'm not expecting anything like that, but he could be the liquidator for Trump.
Could be, but anyway, that's a lot of potential there. Yeah. And we obviously, and maybe that is, you know, again, we were talking about what are the catalysts that could drive the market, you know, reverse the market. Maybe that's it. Hey, a couple other things before I let Steve take over, and I've got to really, I think what I have to do is I have to restart my computer. What I had to do is reset my, earlier this morning, at like 3 o'clock this morning, I reset my router. I wanted to reset. I try to reset it once a week, and I did it without restarting my computer, which I think it screwed up my DNS server. So anyway, I'm gonna have to go and make an adjustment here as soon as I'm done. But I want you guys to keep an eye on this dollar Canadian. This thing is extremely bullish. We're pushed up. You can see we're pushed up right against resistance here. And the dollar Canadian, remember, everybody's positioned on the short side of the Canadian. So meaning, I should rephrase that. Everybody's positioned long Canadian dollars or short US dollar Canadian. After yesterday's BOC decision, you see that we have rallied quite substantially. We're holding that gain. To me, it looks like the dollar Canadian is going to see the underside of this previous support, current resistance, which comes in around 129.50. That's where I think we're going in the dollar Canadian. If the dollar continues to rally here, I think the dollar Canadian is a candidate to go a lot higher. I am not long. I do not have a position. I want to be actually long the pound Canadian. I just haven't bought that yet. Because I think the pound Canadian is going higher. I think this inverted head and shoulder pattern is going to play higher. But I really think that the Canadian, matter of fact, I think I'm going to pick up just a little bit of pound Canadian while I'm talking about it. I did, but I think that the dollar Canadian is threatening to be, you know, to be the next on the block to see higher levels, and it looks really bullish here. So hold on, we have the ECB Press Conference starting in just a minute. We have wholesale inventories, good trades balance. I'll cover that really quick before I pass it over to Steve and the rest of the company, or, you know, Steve and Stelios, and I think Greg is going to be here before your esteemed guest. So
initial jobless claims as well, Blake.
Oh yeah, I guess we do have unemployment claims. Yeah, you know, it's so funny. Unemployment claims have been such a benign number. I mean, the market just has ignored it, probably because we're close to full employment and the number is extremely low. There's going to be a point here, probably in the very near future, where we're going to start to see an increase in weekly unemployment claims. They're going to start to go higher, I would think. But we're expecting, you know, I think we get back towards the 300,000 a week number. But you know, we've been hovering around the low 220s, 230s, 240s for so long now. It's crazy. But anyway, the dollar yen, we are, let's see, about 45 seconds away. So we'll stand by for that. And so if Yellen is out of the running, that increased that gave the bulls a little bit to claw onto, because as I was telling our traders yesterday that, you know, Yellen is the dovish. She had been the dollar dovish choice. And Powell is going to be a very similar to Janet Yellen, by the way. If Powell is selected, he'd be just another Yellen. But if we get John Taylor, that's where the dollar would probably be extremely bullish as a response. Okay, so heads up, here comes the data, and goods trade balance about in line, and weekly unemployment claims in line. So yeah, nothing to really do here. Okay, well, hey Steve, I'm gonna pass it over to you. I need to restart my computer, unfortunately. I've got to go. I got to go deal with this. It's not fun. All right, and I hope you guys have a great trading session, and Dale, have a wonderful meeting or interview as well. Okay. Whoops.
Okay, thanks so much.
Dale. Sorry. Here, I'll pass it back over to Steve.
Yeah.
There you go.
All right, Blake. Catch you in the other room later.
Yep. I'll catch you guys a little bit later.
Yeah, Blake.
And Richard Angeles, thank you for your thoughtful comments. Steve, the interesting comments we're getting from Richard. Why would Trump, he wants a weak dollar. Why would he pick Taylor? Because Taylor's, in favor of a stronger dollar.
I just didn't want to interrupt Blake, but my question is the same. Regardless of the Taylor rule, etc., which it's an objective fact that the Taylor rule shows that the U.S. rate should have been quite a lot higher than they currently stand. By the way, the Taylor rule takes into account the targeted inflation. If I remember, it takes into account GDP. It takes out potential output, and it also has a couple of factors that you need to eyeball them or anyhow adapt them according to an economy. So it can give you a final number of what the price is, what the nominal interest rate should be. In this case, we know Bloomberg also has the Taylor rule. You can track it for any economy you wish. I don't remember how high it is, but it's very high. For the US, it's like 3+%, if I remember right. So the question is, Trump is is trying to connect constantly the performance of stocks with his performance as a president. And as you've said, he asked for a weaker dollar, and he actually he got a weaker dollar. I mean, we've had since the very beginning of the year a dollar that has been in a downtrend, and
about 8% lower or so, right, buddy?
So yeah. I can't even begin to understand how Taylor would be convenient as a choice for Trump. Of course, we can't know everything, but I mean, we can't know what's underlying.
He's so unpredictable. He could wake up one day and go, "Yeah, you know what? Maybe a strong dollar is good."
By the way, Stelio, we're going to be showing technical analysis here. So if you can be watching Draghi and tell us if he says something, because I can't be tracking them at the same time. Okay. So far, we've seen a dovish statement from the ECB. They're going to be, along with reinvestments, they're going to be extending the QE. For the first 9 months, it's going to be roughly like 45 billion, 30 billion plus 15 in reinvestments. That's going to be around 45. They also, reiterated once again the open-ended nature of it, etc. The initial reaction, obviously, from the euro is lower, but quite muted. Of course, as you understand, now with Draghi speaking, and according to his initial statement, which he's doing as I'm speaking now, and according to how he answers the Q&A, we might see an acceleration lower from here, which will confirm the rejection from the 118.50, which, as you've seen, we've tested, a couple of times, and we almost tested it once again today. Or we can see a reversal. To be honest, after the initial statement, obviously, being long the euro at the moment seems like like a not an easy bet. And there are a couple of more currency pairs I would want us to see because they're connected to that. But before we do that, let me remind everybody, we have been waiting for the DXY for several weeks now to give us some kind of indication of what's happening here. Are we seeing an inverted head and shoulders formation, or did we just see like a little rebound before resuming lower? As we had said, the levels to watch were 92.80, 93, that area, and 94.20. So currently, especially after the initial move of the euro, the DXY is almost at 94.20, which is the resistance. We're actually at 94.10 at the moment.
So Steve, do you need a close over 94.2? I know you.
Absolutely.
Okay.
Absolutely. But if that gets confirmed, I think that then we can easily be talking about a much bigger rebound in the DXY, because everybody's looking at that, everybody's tracking at that. And if the euro, which is a major component of the DXY, actually starts finally giving us some kind of an accelerated move lower, because the correction lower has been extremely muted, it has been extremely slow, it has been extremely choppy so far. So if Draghi actually manages to help the euro fall further, that will definitely also open the door for the DXY. But it's not just the euro and the DXY. Let's have a look at the USD SEK. I know that Blake spoke about. Just look at the USD SEK. Okay, the USD SEK is breaking above a descending channel that was in place since the end of last year, and we're currently peaking above it. The USD NOK has finally found a way to penetrate through the 8 level, and it's currently accelerating higher. I have to admit here that this move higher still does not have the characteristics of an impulsive move, but still the 8 level, let me zoom out, is a key level. It's a level that the market respected the support for several years, for a couple of years. Okay, so that's a major break as well. The USD CAD, on the other hand, is currently at the top of this major 128 resistance zone, and it's threatening to break above it. So we are seeing USD strength coming through several markets. Needless to say, that same applies with the Aussie USD. The Aussie USD has finally managed to break below this 77.40 level, and it's currently testing like the 200 DMA and this triangular resistance as support. So probably this is the last area of support before a bigger breakdown. The Kiwi has already done that, and it's actually seriously breaking down. So we are seeing dollar strength coming through, various of the markets that we're currently tracking, right? So I think that, a close above 94.20 just confirms and probably is going to be enough to turn around some minds that are still, hesitant or skeptical about it. I'm still very skeptical about seeing a new impulsive move higher for the dollar. Or, for example, I know that Grega is also open to the possibility of another high in the DXY. I wouldn't take it that far, I have to be honest. But I'm quite certain that, if we confirm this, we can definitely retrace, a much bigger chunk of the bearish move. I mean, we've barely retraced 23.6% of this move lower, so I can easily see us going to the 38.2, even to the 50% fib, and that on itself is going to be a decently large move that's going to affect all the markets that we talked about, and not only, obviously. So I think that finally this week should bring some kind of a resolution to this whole dollar conundrum we've been talking about, and that will give us a lot to finally take into account, and perhaps some, at least in the short term, some stable trends, because we have had some very choppy markets recently, especially in the FX. So for me, this is it. I mean, this is a very critical day. By the way, this is I have a little bit differently drawn the neckline of the inverted head and shoulders than Blake has. but this is the setup Blake was talking about, the pound CAD. And you know, the pound CAD is retracing a little part of yesterday's move, which it makes sense if you look at it. I mean, this was a huge candle, but anything even down to, I would say, 167, anything that's, you know, that keeps the pair above 167, I think is a good opportunity to be a buyer here. And you know, the next major resistance is a lot higher. And even if we take some measured targets, let's have a look at it. Let's consider this the breakout area. You see, we have an implied target that's exactly at the recent highs at 178 and change. So the implied target of the head and shoulders formation is actually a retest of the highs of the 2017 highs, which is, you know, quite far away from here. Stelio, anything we should know about Draghi?
He has been dovish again, but the market's actually not doing much. So he said very quickly, girls, sorry, my girls are a bit loud. He's saying basically, we expect rates to remain at present levels for extended period of time and well past the end of QE. And also the recalibration of asset purchases reflects growing confidence in gradual convergence of inflation rates. He keeps talking about inflation, and we all know that inflation is slowly ticking higher, but still, you know, quite a bit below target. So he is, and also another comment he said is that domestic price pressures remain muted. So he's trying to keep.
Yeah, he's trying to use the inflation card because it's actually the only card he can use to sound dovish, because having to do with economic recovery, GDPs, etc. I think things are clearly going better in the vast majority of the European countries.
Yeah, the only cards, you're right, the only cards he has left is inflation and, you know, geopolitical things like Spain and all that. But you're absolutely right. He's trying hard, but from what I've seen in the last 10-15 minutes, the euro is marginally lower. It's not doing anything, you know, after the initial move.
Indeed. So, you know, and this, I mean, from a technical perspective, if Draghi, despite the ECB's announcements and the pressure that he as you're saying, he's trying to follow through by being also vocally dovish. On the other hand, you know, people should be careful, because, in my opinion, if this does not manage to break below the assumed head and shoulder formation neckline here, which is, let me mark it,
117,
116.60 roughly here.
okay.
So if Draghi fails to push the euro below there, we might get a snapback, you know, because the market might be like, okay, so, you know, he threw everything he had at it. Okay.
On the other hand, Steve, if it does break down, it would only measure, when you look at the weekly, back about 50% from the low, around 113.
Yeah, but you know, still, to be honest, I don't care about what the head and shoulders target is, because for me,
200-week moving average coming in there.
Because for me, the important level, I mean, for me, a daily close below this neckline should bring the euro at 114.50. For me, that's a major area, 114.50. Right. So. Probably the target of the head and shoulders formation is lower than that, but regardless, I would not be looking easily past 114.50. So, you know, I'm pretty confident that a daily close below 116.60 is going to bring 114.50 to the table at some point in the near future. But I would not be aggressive in looking for lower levels after that. You know what I mean? But let's first see that, because, as I said, they're throwing everything they have at pushing the euro lower, and we still haven't seen, you know, I mean, we are seeing a bearish day today. Okay, it's an outside black candle, fine. I want to see follow through, because if that fails to bring any follow through, I'm remaining very skeptical about euro strength, euro weakness. Sorry, very skeptical. So we currently remain trapped below the 11850, which is a clearly defined resistance zone. It was the neckline of the small head and shoulders that you see here. It's also more or less the top, the resistance area of the two shoulders of the bigger head and shoulders formation. So I cannot turn outright bullish while we stay below 11850. But on the other hand, the more time passes and we fail to break below 11660, the higher the likelihood that the euro is going to correct in time instead of distance in price. Okay, so today and tomorrow, the rest of this week, the 1.5 days of trading days that we have left, are going to be very important from a technical perspective. So I think it's worth it for people to be a little bit more patient, because there is a good likelihood we're going to get some good events and technical events, and then we're going to have some clear trends we can align with.
Steve,
by the way,
it's like they say, a market that cannot sell off will rally, right?
Yes, eventually will. Yeah, we've seen that time and time again.
Yes, absolutely.
Trump also said he wanted rates normalized. Eric says, Eric is very right, but as usual, this is not the first time Trump does it. He's asking for two things that, don't mix up together, because the only way that rates can normalize and at the same time the dollar going lower is for other major economies to be normalizing rates at a faster pace than the Fed does. And we already know that the Fed has started moving prior to other markets, and it makes sense. First of all, because employment is already extremely low, lower than the vast majority of the major economies. Okay, I'm excluding Japan from that. Secondarily, let's be honest, we are seeing extremely frothy asset prices in the US, especially in the US. So that's another reason why the US should be looking to normalize rates faster. So I can't really see how normalization of rates can also combine with a higher dollar. DXY cap and handle, not exactly. Yeah, I know that if you see this one, you can talk about a cap and handle, but it's actually an inverted head and shoulders, because we also have this price action. So it's not a cap and handle, it's an inverted head and shoulders formation with 94.20 being the neckline. Yes, Nick, Stelio said it before, rumors are that Yellen has been ruled out of race for the Fed, sir. In my opinion, we had this discussion yesterday in the chat room, and I was telling people that in my opinion, the best thing for Yellen to have done anyhow is to drop out of the race. There is absolutely no upside for Yellen to remain as the chairman of the Fed, as the chairwoman in this case. The reasons are very simple. First of all, she has been number 2 in the Fed at a period that the vast majority of the people perceive as a successful period for the Fed, because it managed to bring back the economy after the recession we had, the Great Recession as they call it, and the financial crisis of 2008. Second of all, she has had a successful term as Fed governor by not only keeping the economy in some kind of a balance, but also starting the normalization of interest rates without crashing the markets. Now, if she renews her tenure for another, 4 years or whatever, no, actually it's less, I think, there is a very high chance that she's going to fall onto the next recession. And, one way or another, she's going to be blamed for that. So it doesn't matter if it's her fault or not, she's going to be blamed for that. So she can leave now that everything looks, happy and, everything seems to be working perfectly, and claim afterwards that she had, a very successful period at the Fed. She even started the normalization that, for example, Bernanke didn't have to do before her. And while she left, everything was, in mint condition. and she can only claim victory, and her value is anyhow going to be very high. I mean, she can be giving lectures for, as we've seen, like $200,000, $250,000 amounts, etc., etc. So she has nothing to gain by staying more. I mean, she's risking more than she has to gain. It's as simple as that. If you take it as a trade from a reward to risk perspective, it's better for her to cash out now. And I didn't even mention the political risks, because Trump is an individual that's hard to read, and I think that he's a person that can easily throw you under the bus. I see, as I said, I see no upside for her, only downside. Alba, we have Alba saying, hello Dale, waiting for your indications. Is that our guest, Dale? Dale? Okay.
Yeah. Yes.
Okay. Okay, let's have a look at the Aussie yen. And please, whoever has any questions, because the market has actually not moved since, let's start having. I have a question about Aussie yen. Let's have a look at it.
And people were asking about the pound crosses, which
definitely. Let's have a look at them both. Okay, Aussie yen. First of all, don't lose the big picture here. The big picture is that the Aussie yen, after being in a prolonged downtrend within this channel, got itself in a recovery that's not channeled, but it's like a large triangle. We are currently in the middle of this triangle. So if you look at the longer term on a chart, you understand that we're in the middle of nowhere at the moment. Having said that, we are currently retesting the broken descending channel that we had here. And also we retested yesterday and today these lows. So let me put it simply, in the short term, as long as we hold above this area, I wouldn't exclude a push higher. Okay, but if we actually fail this area, then I'm looking for another push towards this support area, which is at 85.70. So we're currently sitting on some good support. Obviously, somebody could say that the reward to risk is to be long from current levels, but seeing the Aussie USD breaking down as well, I would be skeptical. So, I'm not involved with this. Reward to risk being long in the short term, because you have a very clearly defined stop loss. But if that fails, then we're headed, I think, at least a couple of hundred pips lower. Okay. That's my view on Aussie yen. Let's have a look at the pound crosses. We already saw the pound CAD, so let's go check the pound Aussie. Okay, the pound Aussie, retesting this area. Simply put, as long as we remain above this trend line, and especially above this area, it remains bullish, and why not another push towards the highs? Greg explained why. I also said that I agree. By the way, I think we have Greg online, so he'll take over for the next 10 minutes. We remain bullish, both the euro and the pound against Kiwi and Aussie. Welcome, Greg.
Hey, Greg, a wizard.
So, Greg, how do you interpret from a technical perspective the initial move? I'm giving you the screen, by the way. The initial move after the ECB's announcement and after whatever we've seen so far from the Draghi's presser.
About the euro?
Yeah, the initial reaction. What do you think about it?
Firstly, I want to take a look at DAX. Okay. So actually, if you recall, last time we spoke about this correction here on DAX. I said that this is probably ongoing triangle in a wave 4, and it looks like that this triangle can be finished because of a nice move to the upside in the last few hours. So if we can take out today this bullish level at 13,064, then obviously this would probably
another 200 points.
Yes, for nice move up to the upside into wave 5. Okay, but we still need to see a daily close above this level. Currently, if I extend this trend line a little bit, we are just testing it. So it's actually still a sideways consolidation, but since we have 5 subwaves, I'm quite confident that we will see a break to the upside. So last time you mentioned, Steve, that euro dollar could push to the downside, and we have seen a nice decline on euro dollar, which suggests that we are probably moving more complex here to the downside, right?
Okay, so Greg, you would say that you would favor more downside in euro until the DAX objective is wave 5 might be
yes
completed?
maybe we get a retest of 1.1660 level, but still I think that this could be a correction no matter if we go up from current levels or from a little bit.
It's too slow and choppy. It doesn't look impulsive in any way, the move lower.
Exactly. So I'm just still prepared on a bearish, on a bullish breakout, but it looks like it will maybe happen with a delay. Okay, even
so you might be able to key a euro buy off of a DAX high, a euro buy off the DAX high.
Once we get a fifth wave up on DAX, yes, that's when euro dollar could give us signs of reversal. But until then, we either see and retest lower levels on euro dollar, or just simply we go sideways. Okay, that's also one possibility. So, but at the moment, the best scenario to play out is probably DAX on the long side.
But from what I understand in your Euro USD interpretation, that likely means that you're still expecting a lower low for the DXY, I'm guessing.
For DXY, yes, of course. I still see it is in a wave 4. Okay, so we are in this red wave 4 still.
Okay, so you don't expect the inverted head and shoulders formation to actually end up playing out, right?
Let's assume that I'm waiting and want to see a fake here. So fake breakout and then a reversal to the downside. It's for me, it's a little bit too slow move to the upside to say that dollar index has bottomed. I'm still somehow waiting on this dollar index to unfold a 5-wave fall from 2017 high. So by the end of the year, hopefully we get a retest of this 261.8% FIP extension of wave 1 measured from wave 2 high, and then a reversal to the upside. But of course, I have alternate count labeled here, as you can see. This obviously could be a valid count if your head and shoulder, a reverse head and shoulder pattern will play out. But from bullish perspective, I would probably turn bullish on dollar index immediately if we break this trend line connected from 2017 highs.
Where's that coming in, Greg? Of a 95-ish, 95 and a half?
That's 95, 70, 60, around there, yes.
Got it. Thank you.
Okay, so as long, actually, basic technicals suggest that this is still downtrend as long as we are actually below this trend line, right? For this year.
Depends what you consider a higher low, because, for example, a break above 94.20 does satisfy somewhat the higher low. I mean, we will have broken, you know, that previous area before the last dip that we had. So that somebody can interpret that as a higher high after a long period of time. You know what I mean?
Yes, I know, but still, if I go back and check out this former swing high, I was bearish and expecting last week the top here on dollar index, and now, as you can see, we are again at this level. So again, this is still important resistance level, and if I was bearish at the same levels 2 weeks back, there is no I don't see any reason why I would be bearish today at the same levels.
Just playing the devil's advocate here, doesn't it trouble you the fact that we have started seeing several pairs showing breakouts? Yeah. And some interesting breakouts. For example, USD NOK is now breaking above the 8 level. The USD CAD is actually trying to break above the 128 level. USD SEK is breaking above descending channel, etc.
Yes, I know, but euro dollar, which is actually main driver for dollar index value, right, is not showing
57%. Yeah. No, yes, I agree with you. I agree with you on that.
So that's actually the reason. But if the euro is showing us weakness, then obviously this will just confirm the overall dollar strength, I suppose. But technically speaking, Aussie dollar has 5 waves down, right? So we expect 3-wave reversal, which means that even dollar NOK, every pair could see a free wave pullback after this first move from recent extremes.
Can you do me one favor? First of all, let's answer to our friend, because I know this is a question a lot of people have. Perhaps at some point you could ask Grega for his Elliott wave view of SPX over the next year. So he wants a longer term view of what you think about the SPX. And then can you please have a look at the short-term structure of the USD SEC and tell me how you interpret the move higher?
Yes, I have it. Just a second. I had somewhere, because you asked for me and I was looking for it. But I don't know where it is. Just a second. Okay, we can do this real quick. We have a guest today.
Yes.
Okay.
Yes, we do.
So actually, long-term view, I see a free wave move to the upside. Okay, which I think it's still ongoing. It's probably wave C, which should unfold 5-way structure. Okay.
So you are bullish the USD SEC at the moment?
No, at the moment I'm not bullish, because at the moment I'm sideways, because I'm tracking here.
You also think that's a fourth wave?
For wave C, yes, exactly.
Yeah,
okay. Why I think that this can unfold a 5-wave decline are actually two things. First thing is, if someone think that this is a 5th wave and this was a wave 4 low, then you need 5-wave rally here, right? But within this wave 5, you cannot count 5 waves. Okay? So if you ever see a free wave move to a new high or free wave move to a new low, that's either corrective pattern, but probably part of a corrective pattern. In our case, I think that was part of a flat in a wave 4. So I would label this as a wave B and wave C.
Yeah,
so
ABC, yeah.
In a flat, you would expect wave C to make 5 waves to the downside. And for now, that's still not the case. This clearly shows us evidences that the recent breakdown was sharp and strong. So it's probably wave 3. Now we are correcting up for a wave 4, and I'm expecting drop for a wave 5 of C.
But once again, wave 4 can extend quite a lot higher without breaking the rules, right? So it can have more legs before we turn lower.
No, normally my maximum level when I'm looking for a wave 4, okay, is I don't want to see a move above 61.8%. 50% is acceptable. 38.2% is ideal, but if we see 61.8%, that's probably not going to be wave 4 anymore. Okay? So I think that we are now at probably reaching some very interesting zone from where actually a new reversal lower could occur. Okay, so I would not be looking too bullish. Also, another thing is that even if we go above ourselves a little bit and say that this is a top in place here, you would again expect a 5-wave drop, right? Because you would say that market has turned bearish. And even in such case, you would see this as a wave 4. So I see a lot of evidences that we could face a resistance right there.
Got it. What about the long-term view of the SPX for the friend that's asking?
For the S&P?
More or less.
Yes. Okay. Still, we are here in a wave 5 of 5. I know that everyone expecting a drop, but it looks like that will not occur anytime soon. Only if we see a reversal from current parallel trend line resistance is probably going to be just a temporary setback. Again, if we see a drop, maybe what 10%, maybe even less. A lot of traders, analysts will probably try to turn bearish on stocks, right? There's no doubt about that, because everyone.
Yeah, and then they're gonna be taken to the woodshed again. You're saying?
Yes, and probably it would be just a wave 4. And still, I'm also expecting major reversal on stocks. But you know, this uptrend, this 5th wave can even be unfolding for the next another 18 months maybe. So looking and expecting top to be formed just in a couple of months, I don't think so. This is a long process, and until then, we need 5 waves to the upside. Okay, so I would be expecting a pullback soon. and then
since we mentioned it, and I know that it's, especially since yesterday, it's very, very popular. What's your count now on USD CAD that we are actually banging the door of 128?
Actually, I can take a look real quick. I have two computers and I don't have all the charts here. Okay, so I can take a look real quick. For our, I think that we could see a little bit more upside. I see that this leg to the upside, even if it's not looking very clear impulsively, we still need to consider that it was bullish. Okay, it was bullish to here, and then we just went sideways. So now we are either in a wave C or in a wave 3. So probably we are going to see higher levels. And if we compare the first leg to the second leg, okay, then there is probably room for, let me take a look. There is probably room for 1.2930. Okay, because
what would be your bull bear line for capitulating on the bearish view and saying that, yeah, okay, this is a wave 3 and not a wave C?
Probably
what would be the level that would change your mind?
Probably if we see more sharper price action and breaking decisively above this 100% fib level. If we see a sharp rally through that level, let's say towards 130.040, then probably this would be my confirmation that we are most likely in a wave 3, not in a wave C. Okay, but for now, for the short term, even if that's going to be just an ABC or 1, 2, 3, 4, 5, still there is probably room for more upside. Also,
by the way, the euro has already pared back some of its losses, and I think that also,
Draghi said the decision was not unanimous. That's why.
Which means that there were descendants. Yeah. Okay. Got it. And let me guess. Weidmann had a different opinion.
He didn't specify. But anyway.
Yeah, I can tell you that. I don't need him to specify. We know that the Bundesbank is going to be #1 in.
I think he said that Steve Volge was very skeptical of euro weakness. Right.
Probably. I have to say that from what I've seen so far, really the fact that they haven't managed to push the euro lower is probably bad news for those that are looking, for lower prices.
Okay, we have Alba Puero with us today.
Okay, so I'll leave you a screen. Thank you for having me.
Okay, Greg, thank you so much, buddy. Thank you for dropping in. Steve, great analysis. And Alba, thank you for your patience. I'm now going to make you. Thank you, bro. Now going to make you the presenter. And I'm looking forward to hearing your voice for the first time. And you can share your screen. And base, welcome Alba Puero, live from Spain. Hi, Alba. How are you?
Fine, and you?
Good. Thank you so much for joining us on a busy Ecb day. Appreciate you taking. Yeah, appreciate you taking.
You invited me the most complicated day. Also, we have the crude oil inventories at 4:30 here in Spain. It's 4:30 in
all right.
Almost 1 hour and a half. So it's a complicated day, but we'll try to look for some interesting sceneries. I don't know if you.
Okay.
All right. Can see my screen.
I can see your screen. We're looking at the Aussie. Before we get to the markets, Alba, it's always interesting to our viewers and our community because everyone starts somewhere, and to hear about our guests' journey. For example, how you ended up becoming a trader, getting into the business, how were you introduced to it? Did you have mentors? Why don't you tell us a little bit about it?
I was introduced by a colleague, and we were working at the office. I worked in a company, an international company, and he said, "Hey, Alba, do you know about the stocks?" And I said, yes, I know about stocks, you know. But in that time, he showed me, well, the Spanish markets, how the stocks were moving, and I saw one of them that was moving up 4%, and I said, what if I put, for example, my savings here, for example, 10,000 euros, I was gaining right now 400, and he said yes, and immediately I opened a trade account with my bank.
Okay.
And began to trade with my real money. I didn't start with demo accounts. I was very risky, and I didn't know at that time that I was getting so risky. But that there are things that you know with the time, you know. And after a long time trading with stocks, I began to know about Forex and all the indexes in CPDs, you know.
Yes.
And I began to work like that. I had a lot of study, technical analysis. I remember arriving from work and beginning to study until 1 in the morning or 2, and trade, and there was a long process. I also had one mentor, but that mentor showed me the things that you should not do in markets. So I decided to take my own way, studying also the world waves, and I have prepared.
So you're self-taught. You're self-taught, Alba.
Pardon?
You taught yourself. You're self-taught.
Yeah, my self-taught. Yeah.
Yeah. So you know you went into it and you decided to learn yourself by trial and error.
Yeah.
Were there any books on technical analysis or
I've studied John's
Yeah.
and you know the wolf wave figure, the wolf wave pattern, and I have some wolf waves over there, and daily movements. I swing trading because I worked and I couldn't be in the computer all the time, so I needed to take movement or trades in higher time frames, you know.
Right.
1 hour, 4 hours, and so on. So this is my trading style, and all the charts I'm going to show you are 1 hour, 4 hours, or daily to see some sceneries.
Okay.
I have listened to your colleagues Grega, Horvat, and Stylianos, and I agree with them with some things they have said. I hope you understand the charts. They are clear, and if you want, Dale, I can share them by Twitter, and maybe in the next days we can make them a follow or a tracing to see if the price have reacted in the zones, or to have to see how they.
Plus everything you say here today is also on the record because we videotape this as well.
Okay,
so,
as you wish. I think right now or lately I put them on the.
All right,
Twitter.
so why don't we start with your setup and things that you put on your chart. Obviously, you don't trade naked. It looks like you have some new moving averages. Is that correct?
Yeah, I have 2 moving averages. I work a lot with them. They are the exponential, the 50 exponential moving average is this one. It changes the color when we have a candle closed above it, it's green, and when we have a candle closed below it, it's red. And this is the 200 simple moving average.
Okay.
And also some prices.
Why exponential on 50 and simple on 200?
Yeah, because all this time I have been testing some moving averages, all different, but the 50 moving average reacts very good, the price with it, and it gives me a great roadmap. If the price is above it, I can now look for you know, Fibonacci, bullish Fibonacci or bounces, and if it's rejecting it, I look for patterns like this one. It's a twister top, for example, and it reacts very good with the 50 exponential moving average. Once again, don't believe me, and if the people is watching us, don't believe anything. Just put your own moving averages and test this by yourself. But right now, for me, the 50 exponential moving average is a good guide for me, and the 200 simple moving average is in higher time frames. It's a good zone to expect a reaction of the price, and also to take to close partially, for example, the trade. For example, I was
all right. So you would use the 200 for a level to take profits on shorts.
Yeah.
Not only looking for
to manage the positions. Yeah.
Mm-hmm.
And to expect some reaction of the price. So we begin with Aussie dollar because I think we have a very special situation with it. In the weekly chart, you see it has rejected the 200 moving average. Right now it's in the 50 exponential moving average. It's also
kind of a bearish
level. Pardon?
Yeah. Okay. Halfway back from that way.
It concludes. And in daily, we had also various divergences, and we have here another Fibonacci level is rejecting, is 38.2. I work, Dale, these three levels for rejections or for bouncings in case of bullish.
Okay.
38.2, 50, and 61.8. The 50 is not a Fibonacci number, but I have it in mind because, as the Dow theory says, one movement moves or corrects the 50% of its initial movement to continue with it. So I have it as a relevant level. So this pair has an interesting movement first until this support that was a resistance, that was a strong resistance. 1, 2, 3, 4. Once it's break it, but it's not. We should see or look for various targets for lower targets. If it breaks the 2000 moving average that is now stopped in it, maybe it can make a pullback to the support broken,
right,
and then back again. And at 4 hours, this is a wolf wave. This is a wolf wave.
Oh, a wolf wave. Okay.
Yeah.
Yeah, I've heard of it.
And also it concludes if we.
You avoid the wolves in Spain, though, right?
Pardon?
You avoid the men that are wolves in Spain, though, right?
The Bill Wolfie?
Men that are like wolves, you avoid them in Spain where you live, right?
I'm not understanding.
It's okay. Yeah, it's a dumb joke. Anyway,
okay.
I'm interested what you have on the bottom of your chart. Is that a MACD at the bottom of your chart?
It's a double MACD. It's a double MACD.
Okay.
It is two MACDs, one of long term, which is the blue one, and the fastest ones are these two. And I used to work with the MACD configured in 9, 18, and 9, not 12, 26, 9, 9, 18, and 9 to see divergences. They give me faster divergences, so I look for it. And this one, we will confirm the bear strength when the blue one, the slowest one, going below zero, goes below zero, and now it's on its way. So this will be a very target for Aussie dollar if it confirms the resistance, making a pullback to the support. Now it's resistance and going down.
Okay. Do you use the crossovers on the MACD as triggers or just?
No, not necessarily, because MACD itself is a slow oscillator. Just I look for it to campaign it.
Okay, so it's like a confirmation to your other work.
Mhm. This is New Zealand dollar. It has a similar situation with
Yeah.
Aussie. And
Yes.
I had this first one with this second very simple, but it must give us a third very simple.
And these boxes are what, measured moves or wolf waves?
These are just impulses and corrections, and I work with Fibonacci. I don't have wolf waves here in New Zealand dollar.
Okay.
You will see I have another wolf waves in another pairs we'll talk about, but right now in New Zealand dollar I only see this target. It reacts very fast and it's almost on target, so it was a very wolf wave. If it breaks this level, we will see an horizontal 0.4 in 0.6675 more or less. But right now we'll see.
What is that for? Is what you labeled for? What is that? Is that an Elliott wave?
It's a target. It's a target that we should use if the price goes into the wave again. Yeah. There are some dilatations, but if in the short term the wolf wave is still on the screen, we should look for this target. And I work these wolf waves not as the original target that as Bill Wolf said, because Bill Wolf said the target should be the join of 0.1 and 4, but I don't consider it in the short term. These targets are tradable, so I calculate another targets for the wolf waves. Okay. Let's see Brent. That right now, I told you in 1 hour we have the inventories, the crude oil inventories. So try not to trade right now, but I have marked here a strong resistance. It's daily resistance, and the only thing we have to do is wait for a reaction of the price in this zone. If it reacts at short, I'll open shorts if it makes a pullback and loses the 50 exponential moving average. That will be a good short.
Yeah. Okay.
But if it breaks upper, then I'll wait for a throwback and consolidate the breakup. So right now we have only the zone to look for it.
Okay.
Okay, let's go to the.
You're ready to go either way, depending upon price action.
Mm-hmm. Yeah. Okay. But be careful because we have the inventories right now, so be careful with that because they always calculate a lot less than the inventories after fixing. So.
Okay, so now you moved the cable. Yeah.
The British pound USD, I have a bullish wolf wave in weekly chart, but it will take a lot of time to get there. The target, the bullish target, it's in 1.4180. But it can, you see this bullish channel is very perfect. If it breaks it, we only just put the wide of the channel, but it will be okay. You know, if the, I don't know if I can draw here, Dave, 1 second. No, 1 second.
Take your time. Okay.
If it breaks out, but it bounces before 0.5, before I mean upper 0.5, it will be okay. We just put the.
All right. So your long-term bias is bullish. you're open to it breaking this up channel, but you're expecting a higher low even if that happens.
Yeah, in the long term, yes.
Got it.
But in the short term, maybe it can break the channel and it would be okay. It will be healthy. It's okay. In a bullish trend, it can go back here. And maybe when it gets over here, I will look for some long positions in the British pound USD.
Very nice look. Thank you.
Erase. I have the euro dollar, and this is one of the scenarios that you have talked before, or Stylianos. I don't know who Stylianos or Grega, but I am the things relevant with euro dollar. I have see here in euro language it's a shoulder, head and shoulder figure.
Yes.
It's, you know, it's a figure of change in trend when the trend hasn't changed in a time to consolidate to change the trend, but the figure is consuming time, and I don't like it because I would like a more perfect figure. But anyway, this is the support. We should look if it breaks, and at 4 hours I'm going to put here the 200 simple moving average, and as you can see, it rejects. It has rejected 1, 2, 3, and 4 times.
Yeah.
This candle was because of what Draghi said. Right. So, but these are the levels we should see in euro dollar. If it maintains below 1.1827, we will look for an attack to the support, and if it breaks it, I should look for this is
a measured move to like 1.
Yeah, measured move. Maybe we should look for first to 114.5, something like that. But anytime it will give us a strong reaction. So if you don't like the figure because it's consuming sometimes the second shoulder, I don't like it. It's in the limit right now. In time, it's almost.
You don't like it because there's no time symmetry. Is that what gives you pause?
It's like a dirty figure. I would like more. Well, in daily, it's cleaner, but it's a dirty figure because has attacked a long time to the 200 moving average. So this will be in the short term. In the short term, the 2 levels we should watch for euro dollar. Now you see it has breakout the 50 moving average, and it's rejecting right now. So I will look for 1.168. To the support, and then we'll see if it breaks it. If it breaks, then make the pullback, and then a bearish pattern again. So this will be what I see.
And there's your 200.
Pardon?
Near the target. There's your 200.
Yeah, it concludes. Yeah. And as the time advances, maybe the 200 moving average gets higher, and will conclude the 2 targets. So it's okay. It's a nice target for a medium or long term. And also the DAX index is going higher right now, and the movements.
I have a question, since it's your native country. It's coming from the audience, the community. What's your view on what's happening with the Catalan situation there?
With Catalonia? No, Dave, don't make me those questions in public.
You don't want to talk politics? It's fine.
I objective think that Puigdemont doesn't make right things, and he wanted to put a referendum, yes or yes, and he made it bad, I think. And now the government has said that it's going to apply the 155 article of the Constitution.
Yeah.
And well, they are talking, and right now, Puigdemont, I think the latest news, I'm not sure because I was preparing all this, but he's going back. So that would be a good thing for our Spanish index. In fact, it grows. It makes a bullish movement right now, and I think also that will give the DAX of the European indexes a bullish movement. A little smaller than us.
Okay.
But there, it's complicated. The situation in Catalonia.
Yeah.
It's very complicated.
Everywhere in the world, politics are complicated. So I could tell you prepared for this interview, Alba. A lot of great looks. And was there anything that you wanted to? Oh, you're going to the S&P here?
Yeah, because Greg analyzed it right now before the S&P 500, and I agree with it. I don't control Elliott waves, but I have studied this pattern, the bump and run reversal. You know what it is? It's a technical analysis figure that was included in 1997 in technical analysis of the stocks and commodities by Thomas Wolkowski, and it's a pattern that you only have to see it in daily, weekly, or monthly charts. Only in daily, weekly, and monthly charts. And it says that the first part is the lead-in. It's a normal trend, bullish trend. One second. Okay.
Right.
It's a normal. The speculation is normal, and the prices grow in a normal way. And it says that it has to be an angle. I'm sorry. Of 45, below 45 degrees. It's almost 20 degrees. It's okay. And then it begins the bump. The bump is a bullish trend. It's a stronger trend. It's the second phase of this figure. The growth is strong, and it's combined with a lot of volume. And the angle for this phase is between 45 and 60 degrees.
Okay, that's your okay. That's that line.
47, more or less.
Yeah.
So what is this figure for? This is only a guide. We have here the directive or the bullish trend, and if the Dow Jones break this trend, I'm going to draw. Right now, we are not going short, and we are not expecting to break it. Let the Dow Jones grow and grow, but if it breaks this line, there goes the run phase, bump and run reversal. This is the lead.
Then it's over. If it breaks that 47-degree line, then it's over.
Yeah, when it breaks this one, the target is the leading. So I have identified this pattern, and now we should see the price reaction. But do not.
That's the part. See?
Do not.
I learned something from you.
Yeah, Thomas Wolkowski.
And you're.
We had this pattern. I'm going to show you in the French index. Are you looking to? Are you seeing an image of CAC 40?
I'm still seeing the Dow.
Okay.
US 30.
It's okay.
I'm still seeing the US 30.
Okay, I'm going to show you right now here. For example, in DAX, we have this one.
Okay.
This figure This is weekly. This was the lead-in, and this was the bump phase. So when it breaks it, then goes the run phase until the lead-in, So this figure is only in daily, weekly, and monthly charts. This figure. Okay.
Yeah, you use a telescope for this, no microscope.
Okay, Euro pound, Euro British pound. To end, I'm going to end with Euro British pound, and let's see the USD yen and the Euro yen for some interesting movements. I used to combine Fibonacci with the wolf waves, and right now the Euro British pound has a very wolf wave in daily. It has reached the target, you know, the 4 horizontal. It has reached, but if it continues respecting the various trend line and it breaks 0, it has a lot of probabilities to reach 0.844. So this is my various target for Euro British pound. Is daily. It will take time, but we have a roadmap here. And for USD yen, I don't know if my colleague said there was a kind of triple top. It says a triple top in your language? Triple okay. But we must have a clearest reaction. If I put here, okay, I'm going to put 50 exponential. It's over here. So until this reaction isn't clear, I won't open shorts in USD yen, because USD yen goes a lot with the indexes, and if Dow Jones is going higher, maybe USD yen won't be so weak to try to open shorts. And also in the reaction of the resistance, here we had a bearish pattern, for example, or here this is a bearish pattern also, but in this time the reaction wasn't so clear. So I'll wait until it makes a lower maximum, as you said, or maybe it loses the 50 exponential moving average, because we have a lot of way to the targets. We are over here in 105, 104, and 103. So we had a lot of time to think about the shorts and take short. Now this figure has give us 900 pips, but now it's stabilizing in this level. But
so you're either going to wait for a breakout over that resistance, or
no. If it breaks out, I won't open longs. I will wait for, if it turns down, for reopen.
So you favor short, but it has to take out your orange line. Is that correct?
Yeah, maybe if it turns again with a clear pattern, like a scissor top, something like that, it's okay. Until the 50 exponential moving average. But if it breaks it, I will leave them to swing.
Okay.
And
all right.
I will end with Euro yen, because here again we have another very wolf wave, and the targets. Well, the first target, you see, I always wait for the, if I have entered, I have not, because I waited for the data of the BCE, but right now it's attacking the 50 exponential moving average. If it moves, if it break it and make something like that, or we can at the next lower high, if we can put any Fibonacci here to see if it's rejecting any relevant level, I will look for this area.
Okay, I agree with that.
Mm-hmm. And that's
Not that it matters, but what a great presentation, Alba.
Thank you, Dave. I appreciate it.
You know, I want to give you some time to. Do you have a business model where you teach or provide signals or?
No signals, no Dale. Signal is a forbidden word for me.
No,
I
okay.
have a project because another trader, I am retail trader, Dale. I don't feel myself like a pro because I only trade my own money and it's enough for me. And
Well,
another
to me, that's a pro. So why don't you start considering yourself a pro? Because you are.
No, I don't know, Dale, because right now, with all the things I know and all the things I've suffered and everything I've passed in the markets, right now I'm doing it well and I'm getting paid, okay, by the market.
Okay.
But anything can change tomorrow, and everything that goes well with you right now, all the figures that works good, maybe they won't. So
You're
for
right.
me,
Well,
the word pro is, I don't know.
All right. Well,
Right.
the difference between pros and amateurs are pros know how to lose. And your presentation to me, you could reject it, is a professional presentation. I want to thank you so much. I could tell you put some time and energy into edifying our community today. I learned about this bump and run thing that I never heard of before, and I'm so happy that I reached out to you on Twitter, and even happier that you accepted our invitation to be our guest today, Alba.
Thank you. I appreciate it.
So
our project.
I hope that,
yeah.
So I hope pips might continue to rain down on you. And
yeah, sure.
How long have you been trading FX now?
Almost 6 years, Dave. But trading, as I said, with my money, with no demo accounts. Right now, here's the IC Markets demo account because I once went real with them. This is an Australian broker, and for me, it's one of the best data providers. But when I passed money to the trading account and retired, the bank commissions were huge, and I had to close all my trade accounts with them. But I maintained the demo because they don't close overnight. The moving averages were good. The data is very good and very fast, so I maintain it. I work with another Spanish broker.
Okay. And people could follow you on Twitter at Albita Mix.
Albita Mix.
Did I say it wrong?
Yes. I normally post analysis, scenarios, and some English people follow me, but I usually or normally forget to put the things in English also. But I think my charts are very clear to very, I know.
Yeah,
to see the targets, to see the market intention, and if anybody has any doubts, just ask me whatever they need because I'm going to answer them.
Okay.
And well, the project you said, a retail trader called me and said that he was reading my blog and that he feels like me, like a trader, daily trader, because I don't think traders are between Ferraris and all the money all the time. I feel day trading as a very lonely activity, and I don't feel like being a millionaire. No, nothing at all. So he felt it too, and we began to make a project which is salaparatraders.com. It's a workspace for traders. We put scenarios like this one, for example, and maybe if you're in the room, you said, yes, because I have, for example, average divergence, and we put in common all the strategies, and we are reading the market continually. We have all the products, stocks, Forex, indexes. And
you want to show that? You want to show that? Your project?
I
You
don't
can put it
know
up on
if
the
I
screen.
can show that because I tried before to show you the bump and run reversal, but
Okay.
it doesn't let me. So I'm not going to show you here. Maybe later I'll put a tweet
Okay.
and you can retweet it for the people
Yeah,
if they want to,
put a
to
link,
visit it.
put a link up, and I'll get the word out about what you guys are doing.
Okay.
And
And that's my project, but they're not signals. The people went there to learn because we share different strategies like wolf waves, Fibonacci, price
Right.
structure, and we work daily there.
yeah,
So
it's
not
not easy. It's hard
yeah,
work.
It's not easy. Yeah, it's a
Yeah.
hard work.
And
Yes.
you're hard. I could tell you have a great work ethic, and I'm happy to now call you my trading warrior sister. Thank you. You are a warrior, Alba.
Yeah,
And
I know, Dale. I know I am. I don't
there's
know
no
how
doubt in
much
my
how we
mind.
survive, but I am. Yes.
Yeah, you don't quit. You have perseverance, and I really appreciate you taking the time to be with us today. And you're always welcome
Not
here
this
in our community anytime to drop by.
Yes, it's
If
very
you feel
interesting,
lonely,
yes.
if you ever feel lonely, drop in and say hello. And thank you once again for your presentation. It was excellent.
Thank you, Dale, for inviting me. It has been an honor. And anything you need or anything the audience need, just make a tweet or send me
Okay.
an email, and it will be a pleasure to answer it.
Thank you. Everyone thank Alba for her time. And
I don't see the
great
chat,
work.
Dale. I cannot see the chat. Or is the chat there?
Yeah.
The chat is blocked for me. I don't see the
Oh, because you're the
questions
presenter.
or something. I don't
Okay.
see the questions.
Yeah, Zia, everyone's thanking you, Alba. Gary,
Oh,
Zia.
thank you for
They're all thanking you. So we'll see everyone tomorrow for TGIF. Good hunting the rest of the ECB day. Alba, pleasure to know you. I'm glad our paths crossed.
Pleasure is mine.
And
Dave.
Richard, everyone's thanking you, Alba. Have a great day. Good hunting, everyone. And remember,
Yeah, you too.
yeah, remember, even if you're trading well, don't just count your pips, count your blessings. We'll see everyone tomorrow for TGIF.
Yes.
Adios.
Bye bye.
Bye-bye, Alba. See you.